This is data worth thinking about. This is the Bitcoin balance on exchanges, and it's going down drastically. The question is, what's going to be the implication? Some Bitcoin maximalists say that this will crunch the supply and shoot up the price. But is that really what's going to happen? Now, over the last 3 years, the supply moved from 3.3 million to 2.4 million. So a decline of 0.3 million per year, with the tendency of this rather accelerating. If the current trend continues, we'd see zero balance within 7 years. Now, it's interesting to think about those overarching trends, because in the end, they're likely going to create some kind of volatility. Might it be to the upside or to the downside, so it makes sense to be diversified in general. But in the meantime, we want to take advantage of the current price moves. We want to buy when the market is extremely negative. We want to sell when everybody is bullish. And there's a useful metric that I don't see many people talk about. This here is the Bitcoin funding rate on the perpetual futures market. So that's the bets on the price. Usually this tends to be positive. In other words, people that are bullish on Bitcoin have to pay the people that are bearish on Bitcoin. It costs money to bet on Bitcoin with leverage most of the time. But sometimes the price crashes, and then the shorts have to pay the long. And that historically tended to be at least the medium-term bottom in the market. We're very far away from such negative funding rates today, but it's useful to keep watching this number, especially during price drops. The opposite also seems to be true. When the market is extremely bullish, so when the longs have to pay the shorts massively to get more exposure, we tend to at least locally top out in the price, right? This is 73K, and subsequently we went down to 54K, a drop of almost 30%. And so isn't it fascinating how the indicators that might be very useful aren't that popular, but the popular indicators actually are not that useful. For example, the fear and greed index. Everybody talks about it, but I don't think it's a useful indicator. If you hear other YouTubers talk about this metric, I think it's better to put a lot of question marks around this, because during times when there was extreme greed, Bitcoin rallied from 15K all the way to above 60K when people were extremely fearful. Yes, sometimes it might make sense to buy, but sometimes you're also just starting the bear market, right? Extreme fear at 50K, and we went all the way down to 16K. So it seems like the fear and greed index is just a lagging indicator of what has happened in the last few days, maybe weeks. We don't always want to buy when others are fearful according to this index, because we might see quite a bit of further continued negative momentum. Now, there are two major approaches with Bitcoin. The first approach is to not think about prices whatsoever and just dollar cost average into the asset, maybe buy and hold forever. Something that, for example, Michael Saylor is doing. The second approach is to try to use data in a way to beat the market. Now, this is very hard, say, for the stock market, because the stock market is very intransparent, and also there's a lot of quants involved. A lot of people that know many things that the average retail investor doesn't know. So the competition is very high. For crypto, the competition tends to be not as severe. And I believe a lot of the data points on how Bitcoin used to behave are still useful. This is Bitcoin's terminal price. And while in the past we sometimes saw the price shooting above that terminal price, we tend to get closer and closer to the price with recent cycles. We don't overshoot that much anymore. Selling at around 50K to then subsequently buy back in at 30K is maybe not the worst market timing strategy. Currently, the terminal price is at 212K. So there's more than another 2x in theory. Are we going to reach that price? Your guess is as good as mine, but at least we can say that at around 200K, the market will be somewhat heated, if history is any indication. There's another indicator that I actually like a bit more, and that's the thermo cap. Again, it didn't always perfectly work. We did overshoot in the early days. We tend to overshoot less nowadays. But again, it gives us periods of time where Bitcoin tends to be higher than usual. And the reason why this is useful is because when we dollar cost average into Bitcoin, right? And then Bitcoin makes a 3 or a 4x return, and suddenly we've got a lot of our wealth in BTC, we might look for exit opportunities to rebalance the portfolio. We don't want to have 80 or 90% of our money in Bitcoin. The price can drop by 60 or 70% sometimes. We've got several years of net worth, several years of income in net worth. We don't want to see such a drop. So we need to look for rebalancing opportunity. And the thermocap can help us to find those. Now currently the value is at 74K. So we might already be in selling territory. But what I find fascinating is how over time, more and more of Bitcoin supply is held by the long-term holder. Now this is Bitcoin's supply over time, right? It tends to expand slower and slower with every Bitcoin halving that happens every 4 years. And we see how much of that supply is actively traded. So the red area is more actively traded. The blue area is more dormant Bitcoin. So purple, for example, is the Bitcoin that hasn't moved for 10 years. Probably most of that is lost. Dark blue is everything from 7 to 10 years, etc. Right? You do get the idea. And it seems like the somewhat more actively traded Bitcoin seems to be a somewhat stable number. So when over time, the number of actively traded Bitcoin doesn't really change, but Bitcoin supply does grow, that means all of the growth goes to the long-term holders. Now, since the overall amount of Bitcoin won't grow that much anymore in the future, since Bitcoin's supply growth gets cut in half every year, it's currently at 0.8%, every additional long-term holder that enters the system is going to push up the price. In the past, the Bitcoin inflation was working against the accumulation of the long-term holders. But in the future, that inflation is much lower. So if the growth of Bitcoin as a long-term investment vehicle doesn't suddenly stop massively, then the price has to shoot up. The number of Bitcoin that's held by the long-term holders continues to grow massively, again with Bitcoin supply, while the number of short-term traded Bitcoin is somewhat stable. It was at 2.5 to 3 million when Bitcoin's total supply was only 5 million, and it's still at very similar levels when Bitcoin supply is close to 20 million. Now Bitcoin goes through those cycles, right? The cycles of accumulation where the Bitcoin price shoots up a lot, then people rebalance their portfolios, a lot of new tourists enter the space that just buy into Bitcoin because we're now very high and it's very popular to get into rising assets. But then subsequently we see those crashes. And because of the high volatility, it seems like a good idea to somewhat spread risk, but also to time the markets. I very much like to look at how much is the market currently in profit relative to the volatility. So when there's a lot of people that are currently in profit and the volatility is not that high, this indicator shoots up. And whenever we were in the red area of this indicator, it was a great selling signal. Now, unfortunately, with the rally in 2021, where Bitcoin hit the 50 to 60K mark, we barely touched the level. So it seems like even though we are already adjusting for volatility, that the gains are still decreasing faster than volatility is. We overshot with most prior cycles over this red area. We did not do that in 2021. And so the question is, will we continue to see a decreasing MVRV Z-score with the cycle peaks? We can have a look at the long-term holder MVRV score, and here it very much looks like that. So here every single cycle top is lower than the top before. And the effect isn't as clear for the short-term holder MVRV score, but still, in general, even though we adjust for volatility, every cycle tends to be less and less intense. Now, one of the reasons why I went into crypto is because we've got so much data, and data can give us a market edge. At least it was very useful in the past. The question is, will it still be as useful in the future because of the institutional buying, because more and more Bitcoin is now moving towards the Bitcoin ETF? Have a look at the long-term holder supply. How much of Bitcoin supply is held by the long-term holders? And this tends to dip down when the Bitcoin price is very high. So the long-term holders are taking profit with rallies, and they did this in the past. But now, as Bitcoin's price is close to the all-time high, we do see how the long-term holder ownership suddenly goes up again. This is not what happened in the past, right? In the past, when the price went up, people sold. Now the price is going up and still the long-term holders rather accumulate. Here's the exact inverse. It's the short-term holders. So the short-term holders tend to have most Bitcoin and the price is the highest. So they are the ones that are getting burned. But currently, even though the price is so high on the historical time frame, the short-term holders don't have much of the supply. Something has changed in the last few months, and this could be because of the Bitcoin ETF. Maybe some short-term holders are now using the ETF for short-term trading. And it appears as if BlackRock is winning the race of the Bitcoin ETFs. The share of Bitcoin owned by the ETFs that's held by BlackRock, or the IBIT ticker symbol, tends to grow quite consistently over time. So more than 80% of the Bitcoin ETF balance is now held in the hands of BlackRock. It appears as if over time the interest in Bitcoin actually fell while the price went up. It seems like over time there's a shift happening from the small retail investor to the large institutional investor. And so when we look at social metrics, when we look at the interest in Bitcoin and in crypto, it actually tends to go down very long term while the price is going up. So the institutional investor is now the exit liquidity of the retail investor. Isn't that ironic? Here we've got the number of Google searches, at least in percent, measured from Google Trends. It peaked in 2018, right when Bitcoin hit 20K. And then with the secondary run up to 50 and 60K, we actually did not see as many search queries. Then when Bitcoin hit 100K, again, less search queries. So there were more people interested in Bitcoin in 2018 compared to today, yet the price more than 5x. This channel, by the way, started in March of 2021. So since then, the interest in crypto has fallen maybe by 50 or 60%. And so I'm somewhat proud that this channel was able to grow despite that headwind. This is now the watch time over time. If you're so far getting some value out of this video, feel free to subscribe and feel free to like this video as well. It helps the algorithm. But let's continue. We see the peak in search queries in 2018, but we see the peak in Wikipedia page views, not just in 2018, but to a similar degree also in 2014. So there were way less Google queries in 2014, but a similar number of Wikipedia searches. One way to interpret this is that in the 2018 rally, people were not that much more interested in the fundamentals. They simply just wanted to buy what was going up. The fundamental research happened in 2014. And yes, there was still some search in 2018, but again, relative to the Google search queries, it was not that much more higher. Now, and what happened afterwards, again, we see less and less research, at least using Wikipedia, while the price continues to go up. Now, how does all of this data help us to time the market? There is this idea of seasonality, right? That there are some months where Bitcoin is going up more than other months. Now, let's have a look at this historically. How strong is that effect really? This is Bitcoin's performance over the different months. So we start here in 2010, that's the lowest line, and we go all the way to today, 2025, the highest of the rows. And we are now looking for similarities in the columns, as in, are there particular months that tend to be positive or negative? It seems like October historically had been a very good month. In the last 6 years, it only saw gains. We had one slight loss in 2018, but then again, another 3 years only with gains. Contrary to that, September wasn't really that great. Same for August. So historically, it was the best idea to sell at the beginning of August and then buy back in at the end of September. Are there any months that are particularly bad? December tends to be not that great. Yes, we had 2020, but in the last few years, it didn't do that well. And the other months tend to be somewhat mixed, right? The seasonality effect isn't really that obvious. What is historically obvious though is how much the Bitcoin price can go down during a bear market. The answer is between 90% and 75%. Historically, this tended to happen every 4 years or so. And if history is any indication, maybe the next bear market will end after a drop of 60%, maybe 65%. There is a counter argument to that theory though, and that's the current kind of demand that we see in Bitcoin. So of course, price discovery happens with demand versus supply. And if the demand doesn't turn into supply anytime soon, because everybody that's buying has a very long-term time horizon, the price can stabilize at higher levels. Have a look at the Bitcoin ETF balance over time. This tends to go up. We were at 800k Bitcoin at the beginning of 2024. And now we are at 1.4 million. So 600k accumulation over the span of 1.5 years. And again, most of the time, this tends to go up. There are not that many periods where we see distribution through the ETFs. Now, there's the second driver, right? The Bitcoin treasury companies, which is spearheaded by MicroStrategy. This also tends to just be long-term accumulation. It doesn't go the other direction. Now, here's the picture long-term, if you combine everything, and it shows us a very positive message. And that message is that the accumulation by those ultra long-term holders tends to accelerate over time. It took 4 years for those entities to acquire 1 million Bitcoin. It took another 1.5 years to acquire the next billion. So things are speeding up, despite the price going up as well, right? It takes way more capital now to buy all of that Bitcoin compared to when BTC was just $7,000 or $8,000. So the institutional interest is growing faster than the price. And so that then begs the big question, are we actually going to see another 60 or 70% drop in the future? Because if you're speculating that history will simply repeat itself again, you might do the wrong move. If you're waiting until the next massive bear market, maybe you're going to miss out. Again, because institutions accumulate at an ever accelerating rate. And so my target in the midst of all of this is to not just accumulate Bitcoin, but to also get some additional performance on top of that. So I'm going long Bitcoin, but at the same time, I'm going short the assets that are highly correlated to Bitcoin, but that tend to do worse than BTC over time. So we still have upside potential when Bitcoin goes up, but we make more money than just by buying and holding. It's a strategy that tends to work very well. This is the performance of the smaller altcoins in the last year. And yes, there are a few outliers. There are a few altcoins that are going up. But again, in the last year, Bitcoin went up by 60%. And still, all those altcoins went up by 80% or by 90% or by 70%. And we can make money from this. We shouldn't just ignore the altcoin market. We can make money when other people buy those things, burn their cash, and that burned capital can flow into our hands. Really, instead of trying to pick the needle in the haystack, let's just flip this chart and make everything that's red turn to green, everything that's green turn to red, thus have the odds in our favor, not against us. Have a look at this. This is a few trades where we bet on falling altcoin prices. This is shared by the community. And yes, I know the topic can be somewhat daunting because we're not just buying an asset. We do a little bit of financial trickery, a bit of financial engineering, but with that, we get better risk-adjusted returns. I've made several tutorial videos on how to actually bet on this while having our risk still comparatively low. Because that's the trick. We want to bet on relative valuations, but we want to have our risk management in place as well. Risk management is not a sexy topic, but it's incredibly important because even if you've got a win rate of say 80 or 90%, if during the other 10-20% you're losing money to a degree that you're crushing your entire portfolio, you're doing something wrong. So you have to manage the overall risk as well, even if your win rate is high. I am, of course, sharing my own trades as well. There are several moderators also that help with any questions you might have. Feel free to join us. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message us within the first week and we'll refund you 100%. There's really zero risk for you. And so there should be a link to premium directly popping up over here. Just click on that link. It will lead you directly to the sign up page. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.